Ethereum is looking healthy. We've had a nice move to the upside. We've had a trend reversal confirmation with a pattern reversal signal, and it's likely we're going to see a follow through towards $1,500. So we're going to break it down in a bit more detail today. So if you like today's content, like, subscribe, hit the bell notification, and let's dive straight into Ethereum. We are currently looking at a daily chart on Ethereum, and a few days ago, we said it nice and clearly, we're waiting for a bullish reversal on the momentum. Now, the momentum just measures rate of change, and it can really help us see highs and lows because it tends to marry up nicely with price. And we're looking for this upside movement towards $1,500. And that's what we got the other day. We got the bullish reversal. Our trend identifier dashboard has now confirmed for us it's a bull trend on the daily, a bull uptrend on the weekly, and what we should consider doing is buying. And there's a classic saying in trading, the trend is your friend. Ride it until its end, until it reaches its bend, and we want to trade in that direction. So what's likely to occur? Because this bar yesterday, it's a really powerful indication because it's been a big move to the upside. It's been one of the biggest bars to the upside in a short while. It's closed above yesterday's close or the day before and the day before and the day before and the day before that. So that's a strong indication that we're probably going to get follow through. So there's multiple things telling us, be aware, Ethereum moving towards $1,500. So I'm going to break this down. I'm going to drop down to an hourly chart in just a second. And by the way, if you want to test out my trend identifier dashboard, I've designed it myself, really for myself, but it's been so helpful. We've now made it alive that you can try it for £1, 30-day trial. If you like it, it's £9.97 thereafter. You get buy and sell signals with it and a whole lot of training so you can maximize the use of it. So that's in the link below. Check it out. I think you'll find it really, really helpful. Another thing that I'm going to just add to this chart, I don't think I've got it on right now, is I want to add on this here. These are buy and sell signals, and it's basically the trend identifier dashboard represented on the price chart itself. And basically, it's just making life easier. When we get a bullish crossover that's in line with the bigger trend, we get a nice little arrow that says consider buying, right? So it's consider buying. And ideally, we want to marry it up with pattern, price, and time. There's a great quote. It's Ralph Nelson Elliott. He's one of the forefathers of technical analysis back in the 1800s, 1900s. And he said this, I found this quote. He said, practically all developments which result from our social economic processes follow a law that causes them to repeat themselves in a similar and constantly reoccurring series of waves or impulses of definite number and pattern. So in other words, what we're looking at over here is crowd psychology that tends to repeat itself, and markets tend to move in 5s and 3s. So what we're going to do now is we're actually going to drop down to a 1 hour chart, and I just want to go over here. By the way, you can also get this 4-screen setup for free, the technical analysis that we're doing. You can download it in the link below. You can upload it into your own trading view and then edit it as you see fit. So what we're going to do here is I just want to break down the pattern. So the last video that we did, initially this looked like some type of 1, 2, 3, and I was looking for a 1, 2, 3, 4, 5, but that's not how it's unfolded. How it's unfolded, it looks like a clear A, B, C, and the price has gone above this swing high, and that gives us a strong indication that this low is likely to hold. So it's a double ABC. These are not that common, but it's pretty clear. You call it ABC, some type of move to the upside. That's why we call it an X, and then another ABC. So it's a clear overlapping correction, and we've had a nice move to the upside. So that tells us or indicates to us that this correction is likely over. We've had a break above here, and now it's all about just finding a nice entry strategy. So the way I'm trading this myself, and we'll see how it unfolds, you want to have acceptable capital exposure. But the main thing I'm looking for is a continuation. So one of the simple strategies that I like to use is swing highs. So if the price goes above here, I want to go long and put my stop loss below here. Or if I want to get more conservative, get the stop loss below down here. So the pros and cons, there's always a trade-off when you're trading. If you've got a tight stop loss, it means you're going to make more money. Or you could reduce your risk in terms of you can buy a bigger position for less risk. And the larger stop loss means you've got a higher probability of not getting stopped out, but it means that you're going to have a smaller position size. So you need to make that decision. But because we've got a nice, it looks like an ABC correction of some sort over here, we're probably going to get a continuation. And if it breaks clearly above here, this price, the next price is more than likely just going to have another big day to the upside. We want to be in that trade as well. And what I'll be looking to do in this particular trade is, if we get triggered, I've got an order in at the moment. If we get triggered, is if we get some type of follow through, I will move my stop loss pretty fast, especially if we get some decent move to the upside. Move it to a break even. I will manage half of my position if we get to this zone over here, and then the rest of it I will keep quite far away from the market. And the reason being is we want to ride the trend. Remember, the trend is your friend. Ride it until its end, until it reaches its bend. So what's the potential trend? Now, there's no way of knowing in advance exactly how it's going to unfold, but what we can see is what's likely to occur, right? So let me just show you this. This is what I'm seeing, right? This is what I'm seeing. This is why I want to trade. And again, 10, 20, 30, 40% of the time, they'll unfold like this, and other times they just won't. But we don't know that in advance. So we got some type of move to the upside and a move to the downside, right? It's looking at it as a 1 and a 2, right? A wave, potential wave 1. This is 1 or A, 2 or B. Remember, market's moving 5s and 3s. So we're anticipating a move to the upside. What we said in the last video is if the price doesn't close below $1,200, that's a good sign, because it's an overlap. We don't want the overlap. If you're bulling and buying, or if you're bullish and buying, because overlaps are a sign of weakness, and it shows that the sellers have a lot of strength, and we're probably going to get continuation to the downside. So now we've got another move to the upside and some type of other correction. So what typically occurs is this is what's called a potential wave 1 of wave 3. Right? Well, it's 3 or C, right? But let's just keep it simple for now. This is a potential wave 2 of 3. And a wave 3 or wave 3 can be very explosive. So if it is a wave 3 or wave 3, we've had this initial move up. We might get a bigger correction. We might do. We'll see how that unfolds. But the next move to the upside can be very explosive. And it could, be one of the biggest bars to the upside in a short while, some type of correction, and then another move to the upside. So we'll literally manage the position if this occurs. We'll look to exit half in this zone over here if we do get follow through. Now, it's one of those things. What I've noticed with people that are just entering the game with trading is that they are too concerned with being right all the time. And it's not about being right. It's about trading well. It's about stacking the odds. So we've now got our double time frame momentum. We can see it clearly over here. The weekly and the daily is bullish, and we should consider buying. So always want to buy in the direction of the trend. We've got a pattern position, which looks like some type of pretty clean correction. We've had a breakout to the upside above this high over here. So we've got pattern and momentum. If we did this in the last video, but I think this is helpful for you to know. If we just look at this part of the market, like so, we just look at how far did this price overall come down in contrast to this movement to the upside. In other words, it's called a retracement. And there's a few different Fibonacci ratios that you want to be aware of. One of them is the most basic, is 50 to 78.6%. So if we just take this range over here, and if we just plug on 50, 62%, and 78.6, we can see it's in that is a very common correction zone, which is the 50 to 62% zone, right? So when that's the case, now we've got momentum, we've got pattern, and we've got price that's indicating something very strong. We could also do some time analysis. So just some basic time analysis. How long did this ABC correction take in time? And we can project it from over here and see if it took the similar amount of time, because corrections, they tend to have like it's a rhythm. So let me do some, well, it's not basic, it's relatively advanced, but you'll see it's relatively simple once you do it consistently. So we take this movement here to here, and we project it from up here, and we get the 100% called alternate time projection. Let's just make it a thick line there. You can see it's in that zone. Another thing we could do is really just looking at, if I do it like so, if we just identify these lows over here, And then we can do a low to low to low ratio. In other words, we measure how long did it take for this low to occur, and we project it forward. Do the same thing for the previous one. We can go how long did it take this low to occur, and project it forward from this one, and it gives us a nice time cluster. And then lastly, we'll just do high to lows. You go, yeah, what are you measuring here? We're measuring the rhythm of the market. We've measured price, now we're measuring time. There's rhythms and cycles, and we can have high probability price zones, time zones, momentum, and pattern. And when four coincide, then you've got a nice high probability setup in your hands. So now what we're going to do is just going to measure how long did this take, project it from this high over here. How long did this one take? Project it from this high again over here. And how long did this one take? And again, project it from this high over here. So again, once you get used to this, everything in life is difficult before it's easy. But if we just go bump, bump, and we just go from this high over here, just make sure I can see if I can get it, bang. And then let's do this one here. And again, we'll project it. And then last but not least, this one over here. Projected from up here. What we're looking for is a cluster. So keeping it nice and simple, we got this time zone over here. Now we've got four things telling us. We've got double time frame momentum. That's a bigger degree trend on the weekly chart, and then a smaller degree trend on the daily chart. The momentum are both pointing in the same direction. That is my minimum criteria. Minimum criteria. It doesn't have to be weekly and daily. It could be daily and 1 hour. Depends on your time frame of trading. But it's to have a bigger degree trend and a smaller degree trend. Consider buying. What to do when they coincide? Consider buying. And when I say consider buying, what I'm really saying is look at the pattern position. So we got ABC, ABC, double ABC. We go, okay, now we want to consider buying even more. Now we've got the price ratios. We go, okay, that's a typical correction zone. Then we've got the time ratios. That's also giving us a strong indication that this low is going to hold, likely to hold, not guaranteed to hold. Now we've got something called a pattern reversal signal. The price has gone above this high. We've closed into this former range up here. So that tells us again, this wave C down here is likely to hold. It's likely to hold. Now it's just a case of entry. So we may get a continuation straight away. It just might be a very strong trend and it breaks to the upside. We'll take that all day long. Or we might find that we get a bit more of a deeper correction, which is, we don't know which one's going to occur. So we just put in our order. But if the price does go above this high, is likely this low is going to hold, right? And that's why you want to go on a swing high, right? Just makes it a higher probability trade. But we might find we get a bigger correction like this. And then same thing, we'll just put an order in here to go long and a stop loss down here. Or you can just put a stop loss down here and have an order up here. I know there's a lot of detail there, but with practice, all of this becomes very, very simple. So I'm just going to clean this up so you can have this chart. I'll leave it as is. I'll leave it as is. So when you download this chart, what it will look like, or you can view it. It will look like this, and you can play around with it. I'll leave it as like this. You can play around with it, and you can upload it into your own trading view, and then tweak it as you see fit. So take advantage of we're doing a massive offer right now. It's £1, 30-day trial, trend identifier. It's the dashboard. It's the signals. I've done training. So I've broken it down in detail on how to utilize, how to set it up, and then take advantage of the trend. And to be patient for the trend, to really, really be patient for the trend, because the setups are going to come. And it's more a case of knowing when to stand aside and when to buy and when to sell. So let's finish on that quote again from Ralph Nelson Elliott. This is where Elliott waves came from. He figured this out in the mid-1800s, early 1900s, way before crypto. It just applies incredibly well to crypto because of this. And he said, practically all developments which result from our social and economic processes follow a law that causes them to repeat themselves in a similar and constantly reoccurring series of waves or impulses of definite number and pattern. In other words, he figured out crowd psychology is reflected in price, and the price is driven by fear and greed. And we can see what's predictable. Is the market overheated? Is it panic buying? Is it panic selling? Is it not clear what the crowd psychology is and we just stand clear of the market? But that's practically what we're measuring. And that's where the double time frame momentum, pattern price, and time all coincide. And just as a minimum, having that trend identifier or the double trend in your favor massively increases the odds of you making some really, really good profits.